course, is Wednesday, June 8th, 2017, our regular scheduled webinar. And, of course, today is the testimony of James Comey. So it's been, I don't know if you've been watching it, but it's been somewhat riveting. I just want to do a double check. Can you see the screen? If you can see the screen, just type in June 8th, and then I'll know. You should be seeing the first page of the PowerPoint. Oh, beautiful. Yeah, I don't know if you've been watching this testimony. I don't know what to make of it all just yet. We'll look at the market after I finish the PowerPoint, but I'm not sure if it's going to have a major impact. Anyway, I want to start out with the monthly charts again. I'm going to kind of rifle through this quickly. The key is, again, to monitor these upper levels. I mean, as we know, we're above the upper bands on virtually every major market. The Dow 20,530. These charts were from yesterday, so you can see we're about 600 points above the upper band on the Dow. For the composite, we're about 400, close to 500 points above the upper band right now. So, again, all these markets are exhibiting tremendous strength. Now, this is the market to me that's been kind of interesting. As you can see, the oil has really bounced off the mid-band. Okay, and now it's starting to tighten up a little bit. So by the end of this month, I really feel that we'll probably know whether or not oil is bottoming. And oil, we're down to, by the way, oversold levels. On Apple, upper band is 136.58. We're about 20 bucks above that level. So Apple, again, is back to enormous strength. This is a chart I pulled off. This is the 10-year rate. All right, I thought this was kind of interesting because it peaked out at 262. And here's a little, just a little tidbit that I like looking at. But if you take all these prior highs here, 1, 2, 3, 4, those little pivots, and you average them, you get 2.6175. And sure enough, it stalled right at 2.62. And of course, now it's dipping down again. And, as we can see here from the monthly, it's been in a long-term downtrend. Now let's look at the shorter-term intraday and our levels. Yeah, I don't know, it's interesting. I don't know why that phenomenon exists. But a lot of times you'll notice that price comes back and stalls right at the midpoint of these prior peaks. I don't know why, as I said. It's just a really interesting phenomena. And it's strange how that works, but it does, But I think the key is it gives you kind of a ballpark area to look. It's similar to the resistance levels. It gives us an area where there's a potential reversal. For example, even if you look back here at this peak, if we take these two tops and average them, it comes to 3.08. The pivot high was 3.04. Now, if we take the three of them, including the 2.39, divide that by 3, it comes to 285. All right, so if I take 285 and 309, divide that by 2, you get 297. It's kind of interesting. And it stalled right at 304. And, again, to me, it's almost like an area where you want to really start to consider a reversal. But again, here's the S&P. Now, what's happened is the major levels have expanded, okay? We are now at 2,500. I believe this market is ultimately going to 2,500. All right, and that to me is the objective. We took out the 2437. We've had, pretty much since then, it's been kind of bouncing around sideways. right? But we know on the downside, 24.2188 is a key line. That's the confirming line down, and at this point, the market hasn't been able to close underneath it. So at this point, we're still bullish. And here's something, again, interesting. We crossed into an uptrend on the 30-minute chart back here on the 25th. And interestingly enough, it got oversold here. By the first crossover, oversold condition, rallied $40 into that 24.37 line. And then here's the 10-minute. And again, this was kind of interesting. I just showed this today only because, you know, the 10 had crossed up. Actually, never really crossed down here on the first. Got oversold slightly here on the 6th and again on the 7th. And then, lo and behold, the market jumped about, what, $11 off that. And then here's the VIX. All right, VIX downtrend on the 60, sold off the 1563 peak, broke back under 1250, and now we're trading between 1094 and 938. All right, and 938, of course, is the long-term oversold. But here's something very interesting short-term. The VIX had actually stalled, had actually crossed into a downtrend on the 30-minute chart. So I do expect the VIX to push down and the market to push up. Here's the Qs. All right, now, this level, to me, in the Qs, is similar to the S&P at 2437.5. Okay, and as you can see from this chart, the other day, it came within 2 cents of it. Could not take it out. All right, so for this market to head higher, I would expect 143.75 to be violated. And if it is, then the target's up to 150. But right now, we're looking at 142.97 on the downside. Now, yesterday, it actually closed underneath it. So if we closed under it today, it would probably retest 140.63. I don't know where we're trading right now. I didn't look at the Qs. But the Qs crossed into an uptrend on the 30. So again, we've got short-term momentum bullish, longer-term momentum bullish, overbought on the monthly. And then here's GDX. GDX stalled yesterday, or really the other day, right at the 23.83 line and pulled back. All right, so we're trading right at the 23.44. Would have to close above 23.83, 2 days to move up to 25. Let me go back to this chart. You can see here, by the way, on the 60, it just crossed into an uptrend. Just did that the other day. Here's the daily chart of the GDX. Now, this is very interesting because you can see that the daily is in a downtrend, all right? And it's just below the mid-band. So this is going to be interesting to see if the GDX gets through the mid-band or if it fails there. Similar to what happened here on the TLT. Now, here's the daily chart of the TLT. Now, the other day, it basically butted up, gapped up, butted up against the mid-band, and then, of course, yesterday it sold off. And what's interesting about this chart is simply this. The next upside confirming line was that 25.78. Look at that. That peak stalled at 77, took it out slightly the other day. And now it's pulled back, and it's right sitting at the downside confirming line. This is as of yesterday, which is the 124.22. So we know there's strong resistance right at that mid-band. Go back to the daily. All right. The 200's kind of flattening out here. But again, and again, money flow has been positive, by the way. So, however, having said that, you know, I think for the TLT to break higher, excuse me, it's got to get above the mid-band. And at this point, it's been repelled by it. And that, by the way, that's kind of an interesting short scenario. Okay, it's an interesting short because, number one, you've got 125.93, the resistance of the mid-band. We've got 125.78 as being the upside confirming line, which, as we know, oftentimes acts as resistance the first time up, or the first time it's breached. When I say breached, when the major support line is breached, which in this case was 125. And, you know, here we had the little takeout of the upper band. Here's the retest, couldn't take out the upper band, and it's pulled back. So that's a quick, short trade. Now I want to talk, any questions, by the way, any questions at all on any of the major markets? Because I want to kind of move on. All right, I want to start, I want to go over some of these post-earnings moves. And I'm going to start with DY because we talked about this on the last webinar. This was the last webinar. This is the exact slide from the last webinar. And there were a couple of things that were happening here. Number one, we had the bearish down gap. It was sitting right at the lower band on the 60. Money flow was negative. Now, it hadn't closed above either the high or the low that day. Okay, so it basically traded sideways. Here's the 30-minute view, well underneath the lower band, negative money flow. And then here's the view from yesterday. Now, again, we can see money flow was negative on the daily. Okay, here was the date of the earnings, the huge gap. And then we go to this 30-minute chart. I didn't show a 60-minute view, but here's what's kind of interesting. The low here was 87.05. It finally closed underneath it here. And notice how that bar now acts as resistance. And then what happened from that point, it pretty much drifted down to 79.51. So if you think about this, this trade, just combining all these factors, this little pivot high was 87.72. Okay, we expect the low of the bar to be resistance. Took it out by about, I don't know, 65 cents. So say you got in, you had an order to sell or buy puts when it hit 87.05, went from 87.05 to 79.52 in 3 days. Or actually, this was really the fourth day. So it proceeded to drop like about $8. And then lo and behold, right, got above the upper band, and here it stalled right at the lower band. So at that point, it's time to take profits, okay, and then consider a long. All right, now, DY actually did bounce up, all right. Now, we know that objective one should be back to this. And notice how it could never close above the high of that gap bar. So once it's kind of flatlined, that's the time to exit any longs. And we'll look, you know what, we'll look at DY because again, what's kind of interesting about DY here is the mid-band on the daily, I don't know if you can see this, is 87.57. So again, we know that's a line of resistance. So 87.57, I mean, look at how many times it kind of stalled right at the mid-band on the daily. So if you were long and you reversed here, you covered your short, went long, when it couldn't get through that 87.57 level, you know, it's time to exit the long. and perhaps even consider a short position. But here was an interesting setup from yesterday. This was a log. Now, notice here on the daily, we have a downtrend, by the way, on the daily chart. We had a down gap here. This was probably the last earnings. I didn't check it, but I'm assuming that's what it was. Huge climax volume, all right, kind of traded sideways. And then it reported, and again, huge down gap, almost 10% yesterday, down $7. Now the question is, we're looking at this, what do we want to do? Well, a couple of things kind of interesting. Number one, we're right above the lower band on the daily. Money flow went positive. And then here's the 60-minute chart. Now, right now, under the lower band, okay, as you can see, we haven't had a close above the high or below the low. We look at the 30-minute chart, and it's basically the same situation. But you can see here late in the day yesterday, started to get this huge climax volume coming in. And then here's a 10-minute chart. So the 10-minute actually closed back inside the lower band. All right. And now we're starting to get kind of some buying coming into the stock. But what's interesting about this stock is we've never really had, again, it's sort of like DY. We haven't had the conviction to close above the high nor below the low. All right. Which tells you that, yeah, you could continue to scalp within the body of that bar or that range. Because to me, right in here probably would have been a nice little buy. Was up about $1.75 off that. Now, let me just escape out of that. Here we go. Let me just change this around. Okay. Now let's take a look at A-Log today, see what it's doing. All right. So again, it's continuing to trade within the body of that range. I'm going to look at RH, by the way, in a second, because I thought that was an interesting setup too. All right, here we go. Still not above the lower band on the daily. We still don't have a close either above the high or below the low. All right. So again, we're having, it's kind of in no man's land right now. All right. Still below the lower band. Now, and I think, I think the example of DY points out like, okay, when is it safe to trade below the lower band? I mean, at the very least, we'd want to see a bar here close underneath the low of that gap bar. And right now we haven't had that. Let me erase that. Okay, right now we haven't had that. So to me, if this thing continues to consolidate, the longer this consolidates within the range, the more probable it is going to be that it's going to bounce. So this is a stock you may want to just keep an eye on and see if it continues to do that. There was another one, AMBA. Okay. AMBA had the down gap. All right, now look at AMBA. This is interesting because we did have a bar close underneath the low. Now let's take a look at the 10. All right. This kind of interesting scenario here. With AMBA, you would want to wait to see if it gets overbought. It's interesting because look at here. Now, let me see something here. That's the bar that closed underneath it. That was at 9:30 yesterday. So that was on this push. Interesting. But you know what's kind of interesting about this deal is even though you didn't have the close on the low, on the 10-minute chart it did. It actually, you did have a bar close underneath it. And what's kind of interesting here about this particular deal is that the low again, my line isn't too good, but you get the point. The low of that bar, let's take a look at what that is. That low is 54.26. So it came back to 54.38, and that's where we had the down gap and it ultimately closed underneath the low. So it dropped almost $3 off that scenario late in the day on the 7th. But at this point, I'd be waiting for the 10 to get overbought, or, you know, wait for the Williams up here to get overbought. See if this thing can stall out. And you can see it's struggling right around the pivot low here. And then I would expect another downdraft here on AMBA. The other one that reported the other day with Casey's. You know, one thing that's, I think, very evident by now is this. With these stocks that make these big gap moves off earnings, you generally expect movement. Now this is interesting. Now look at Casey's. Underneath the lower band, we did have a close underneath the low, and now it's rallying up off after coming back through the lower band. Let me take a look here. All right, well, not really super definitive here. Not super definitive here. Money flow was positive before the earnings. Let's take a look at the 60. All right, so the 60, we got underneath the lower band, did have the bar close under it. Now, at this point, where should the objective be on this rally? Yeah, the 50 could hold resistance there. But I think at this point, objective should be back to the high of that bar. The high of that bar is 111.90. Let's take a look at the 10. See, it's interesting. You know, the 10 crossed up here. It closed back inside the lower band. Let me take this off so I could see it. Back here 2 days ago. And it kind of held support there. So that's about 106 level. It's up about 250 from there. And if you notice here, that was still well underneath the low on the 30 and the 60. But what's kind of interesting about this is, you know, you can always just wait until you see it close back inside the lower band to be safe, to take a long. Now it's gotten overbought, okay, on the 10. We know we have somewhat of a bearish bias because we closed underneath the low of the gap bar. But to me, that level there is really the key level. That's probably what it's going to retest. And if it can't close above that high, the high of that gap bar, then we know it's going to make another push down. That to me would be the objective here. Yeah, that's true. The 200 is pretty close to the high of the gap bar. So this is one to take a look at and see, to see where it ends up today. Because it could end up being a nice little move. The one I looked at, they reported, this RH reported a few days back, and I thought this was kind of interesting because, again, we had the huge selling climax on the day of the earnings. The money flow just dipped slightly negative, right? Now we look at the 60. It stopped right at the lower band on the 60. It was under the lower band on the 30. Now notice how on the 30 here, it couldn't close below the low of the gap bar. That's kind of a, I bring that up because that's like a little minute detail that can help you determine or help you make a logical decision as to what this should be doing or what it can do. But what's kind of interesting about this is it never violated the lower band on the 60. It was under the lower band on the 30 and the 10. So looking at the low of that bar, 41.52, if you bought somewhere around the low of that gap bar, assuming it's going to make a run back to the high, which it did, and then it took it out, broke back inside, then you just kept the position going. But if you look at this darn thing made, close to a $9 run in a couple of days off that. Now it's getting back to the point of resistance. We know target 1 really the high. Target 2 would be half the gap fill, which would be divide that by 2. 51.10 is the 50% level. So look at that. It's within, I don't know, 20 cents of target 2. Sitting right there. So now if you had gone long, what do? What strategy could you employ here? Now again, I don't know if Restoration Hardware has weeklies. Let's assume it has weeklies because it would make this conversation a little bit different, okay? But now we're back to half the gap fill. Say you bought, I don't know, let's assume it's got dollar increment options. And again, I don't know if that's true or not. But say you bought the $40 call, all right, that expires tomorrow. And you now have a call that you might have paid, I don't know, $1 for that's worth close to $10. And now you're deciding, what do? Okay, do you just book the profit, assuming that half the gap is going to hold as resistance? Because if it breaks half the gap, the next objective is most likely back to the mid-band, which is about 54. Yeah, Andrew says ring the register. Yeah, you could certainly ring the register. But here's a kind of an interesting scenario to think about, okay? Assuming they have weeklies, and I'll look in a moment to see if that's the case or not. But the options expire tomorrow. So you might be able to hedge this position. Now, think about this. We know if it breaks the midpoint of the gap, okay, that the next target's about $3 higher. So say you could buy a put for like $1. Okay, you're basically risking $1 to add another 3 to your long calls, which is basically a 2-to-1 risk to reward. And more importantly, for $1, if it completely fails and retest the lower band, okay, you've protected that position as well. So again, that's kind of an interesting thing to consider if the stock does have weeklies. Now let's take a look to see if that's the case. But yeah, ringing the register here certainly would be a viable solution as well. I wanted to look at some of the earnings today. There's not a lot. We're getting down to the kind of the end of the earnings season. There's the headline there on Yahoo, Comey testifying. Now let's see here. All right, so we've got Dow's up 65, only up 4 on the S&P. Okay, so let's look at the options here. I don't think RH has particularly good options, if I remember. I haven't looked at this in a while. Wow, look at this. They actually have 50-cent increment options. Let me move this over here. All right. So say you went long 41.5, okay? So say you bought the at the money at 41.5. Not a lot of volume. I'm sure the market makers would really screw you on the bid-ask spread here. But let's go back. Boy, this is unbelievable. I was trying to see what these options would have been. Not enough volume, so they're not even charting it. Look at that spread. That's terrible. All right, let's go to the 42. More volume here. And again, these are the weeklies, so this is even better than I thought. Okay, so here's the 42. The pivot low is about 42.5. Okay, on what day is that? That's the 2nd. All right, now again, these are Monday prices. So they're showing over $1.50. But I'll bet you last Friday, these might have only been $1. Okay, let's assume you paid $1.50. All right, the 42s now are, well, they last traded $8.80, but say $8.50. So you got a nice profit in that. Now it's trading roughly $50. So let's see what the 50 put would cost. Look at this. The 50 put, they're quoting at 25 to 55, only 40 cents. See, my point here is for 40 cents, you could turn around, lock in your profit, and it only costs you 40 cents. And you have a position where you don't have to worry. Now you don't have to sit here and think about it, watching it every second of the day to say, do I pull my profit off or not? If you got a little creative, you might buy double the put position. Because if it pulled back a couple of bucks, you'd still have the long profit and you doubled up on the put. But the point here is that we're sitting here right at a point of resistance, right at the half the gap. And if it breaks through it, it's probably going to move $3. So for 40 cents, you know, you potentially add another 260 to your long position. And then more importantly, if it breaks, so what? Okay. You've basically locked in that profit less 40 cents. So it costs you a stinking 40 cents to do that per contract. But that's the beauty of these weeklies, because it allows you to consider some sort of a strategy like that. Man, now I'm really remiss that I didn't really focus on this trade. Because you can think about it, the 42s are roughly $8. So say you paid $1.50 for those. You've got a profit of $6.50. Well, you're giving up less than 10% of your profit to hedge the position. And let's go to a 10 and see what's going on here. Now, this is kind of interesting because look what's happened here. The 10, it actually broke the mid-band. The 10 is getting close to crossing into an uptrend. So again, I go back to what I said before. For like a stinking 40 cents, you could lock in your profit, all right? Because I think if it pulls back, it's going to pull back to about 48.5. And then what you could do, too, is, by the way, turn around and say, well, all right, if it holds support at the mid-band on the 10, you could ditch out your puts probably at a little bit of a profit. But I wouldn't do that. I'd just keep the put in place, and I'd let it continue to run to see if it goes up another $3. And if it ultimately filled the gap, you'd have a really nice weekly trade. But I can't believe they have 50-cent increment options on this deal. But by the way, if you were looking at this trade, obviously, if you were looking to go long here, right? Sorry, heck am I? And you're looking at the option table here. It's clearly evident that the 41.5 was not really a good option to pick because it just had no volume. This 42 had some decent volume. So you would have gone, I like going as close to the strike as possible when you're using the weekly. But look at the volume here, the 44.5. Let's see what that was 5 days ago. And now, again, they're showing 60 cents on Monday. Okay. On Friday, they might have been 30 cents. Because it had already moved up. Man. Damn, yeah, they were probably like, they might have been a quarter. And look at the bid ask now today, 550 to 6. See, that's where, this gets really interesting because, if you just bought a handful of those, it cost you nothing. Even 4 cost a stinking $100, and they're worth, what, $2,400 today? And again, if you were long all those contracts, look at how cheap it is to hedge it today. So you could actually hedge it going into tomorrow for like next to nothing. It's just amazing. Man. See, this is my problem. I can't watch all these things. I wish I could. Because quite frankly, this to me is a great setup, this whole post-earnings trades. And at this point forward, I'm really going to be focusing on these. Because look at how quickly you can make money on these deals. Unbelievable. Anyway, that's what I wanted to kind of cover today. But, you can see how the weeklies can be used to your advantage. And again, I wouldn't have bought a lot of time had I done this RH. I mean, the beauty of these trades, as you know, is this. Oh, man, this could definitely make your month. The beauty of these trades is the fact that either it's going to move or it's not going to move. I mean, as we know, the typical, like this RH example. I mean, we know it's going to move or it's not going to move. It's almost like you can give it a day or two. Yeah, Andrew, good to see you on the webinar. Not a problem. We're going to be closing out shortly anyway, so that's what I wanted to cover today. So I don't think you're really going to miss anything, unless there's any questions. But that's the beauty of these deals. Either we get the bounce or we don't. Let's take a look here. Let's see if there's any. Like this NX, they reported last week. Okay. Now, NX reported, okay, they reported on the 30th. So here, after the 3rd. So here's the earnings, moved up, and now look at it today. Now it's pulled back, got oversold, and now it's starting to move up a little bit. But I want to find an example of one. All right, Ciena. All right, Ciena had the strong bullish gap. All right, now look at Ciena. Here's the low of the gap bar. It's, I'm not very good using this tool, so let me do this instead. The low of the gap bar is 2620. Now notice how it's holding above the low of that gap bar. 1, 2, 3, 4, 5. Today's the 6th day. Now usually by the 8th day it starts to move back up. All right, so this is going to be very interesting to see if by Monday it starts to make another leg up. But we know we have a strong level of support. Okay, and the reason I bring this up is this. If it closed below the low, I would expect it to come back, maybe fill half the gap, maybe fill the full gap, maybe stall at the 200 or the 253. But you can see it's clearly holding above the low of the gap bar. So it's gone 6 days, never violated the high, never violated the low. So the longer it stays within the body of that bar, the more probable it's going to be that it'll probably make another push up. Let me see if there's another one. All right, Lulu. Let's see what Lulu did. Because Lulu actually had the bullish up gap. All right, now look at Lulu. Hit the upper band. Look at the negative money flow. Let's take a look at the daily. Look at this. See, this is why, we really need to be looking at this stuff. Look at all the negative money flow. Bullish up gap off earnings, right? Opened up above the upper band, then basically sold off back into below the low. Closed below the upper band. Pivot high was 56.85. Came back to right about the mid band, 51.5. So that's a 530 swing in like 2 days. That's, that's really all you want out of this trade. Or if another way to look at it is that's almost a 10% move down off the pattern we're talking about. Negative money flow on the daily, bullish up gap. The corollary to that is bearish down gap and positive money flow off the daily. And by the way, if it's a bearish down gap, the Chaikin money flow is positive on the daily. If it's positive on the 60 or the 30, that's even a better setup. Because then it seems like it's much more probable that it's going to make that sharp move. In the case of RH, let's take a look at RH again, because I wasn't focused on the money flow. Okay, but it happened to be negative on the hourly, and it was probably negative on the 30. Okay, so it was negative on the 30 too. Okay. If this were positive, that would have been an even better trade. But RH obviously was a really tremendous setup because of the fact that they had weekly options. Let me look at Lulu's. June 9th. Okay, so Lulu had weeklies too. Son of a gun. All right, so let's take a look at the puts here. All right, now Lulu was about 57 was the pivot high. All right, let's look at the, oh man, you'd have to go to this strike, the 56. Okay, now the 56, these were expensive. They're showing 220. On what day is that? That's the 2nd. These were very expensive. I don't know if I necessarily would have done that because they to me seem a lot more expensive than the RH. But for the argument's sake, let's say you paid 220. Okay, now you only have a value of roughly 370. All right, you got a 50% gain. Not an all-star trade, but nonetheless a profitable trade. Now you turn around and say, all right, let's see, it's sitting right at 52. The 52 calls are like 55 cents. The 52 halves are only 30 or 20. I call them 30 cents. So you have about $1.50 profit. You could actually hedge off that profit by adding, the call here, and it would only cost you 30 cents. And I think that's the point I'm trying to make here, is that that's the way you could use some of these weeklies. Because let's face it, if Lulu breaks, let's say it gaps down tomorrow, the target would be back to roughly 49. So right now we're at 52 with a potential move to 49, which is about $3. It's funny, it's about the same dollar increment as RH. So on Lulu, you could hedge to the 52 call. Basically you're risking 10% of the potential future profit if it does do that. And the other way to look at this is, if it turns and runs and retests the upper band, well, you really haven't lost money. Your 30 cents has covered it. So again, it's basically a way to use the weeklies to hedge and lock in profits. And of course, it gives you the ability to not have to really be concerned about the position. And I think that's the real key here. Anyway, that's what I wanted to cover today. So hopefully this has been helpful. If there's any questions, shoot them on through. If not, I think okay, let me see if there's any questions. All right. I just want to see what, I saw VRX actually made a nice push today. All right, so it's up over $1 today. I've been waiting for this stock, by the way, to make a move. All right, I prefer, I want to add to this position, but I'm kind of waiting until the 30 crosses into an uptrend. Because this is one of these stocks that, to me, here's the weekly chart. I mean, the 50 EMA on the weekly is about almost 25. I mean, this to me could be a nice, dead cat bounce here on this stock. The other stock that we still have is that FireEye, which we're short the calls for tomorrow. All right, so it's at 1582. You can see FireEye, by the way, is closer to moving into an uptrend on the 30. I mean, what I would do here on FireEye is probably just leave the position open, let us get a sign You know, we'll see where it's trading tomorrow, but it's about 30 cents above the strike. So if we don't get assigned, I'd be very content with that too, because it would allow us to sell another round of calls. All right, but anyway, that's what I wanted to cover. You know, those earnings trades. So, because to me, those can be particularly lucrative. But I want to thank you all for being here, and again, enjoy the rest of the week, and we'll reconvene again in 2 weeks. Thank you.